morning, investors and corporate. Welcome to Digital Roadshow third quarter 2024 performance review. This section will run about 45 minutes, including Q&A. Company will start the section by 30 minutes presentation, followed by 15 minutes Q&A. And during Q&A, investor may review questions in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite NR Instant Produce Public Company Limited to start the presentation.
Hi, good morning, everyone. My name is Dan, CEO of the company, and here's Kun Pen, CFO of the company.
Hi, สวัสดีค่ะ
สวัสดีครับ Okay, so we'll start. I think for those of you who've seen us, we're still recapping. I'll just do a quick recap. We're going actually into our 5th year of being the only carbon neutral food factories in Thailand. We're still very much focused on sustainable and enjoyable food experiences and moving as quick as we can to net zero. So today, we're always trying to improve the format of our presentation. So we'll go through a quick overview. We'll do the Q3 financial results. We break it up into segments, and then we'll do an outlook for the year. So, we're still very much the company that's producing 3,000 SKUs, exporting to more than 25 countries around the world. We're very proud that all of our food factories were highly certified BRC A to A+ across all our factories. We get a lot of questions, around food safety, quality, etc. I can tell you right now, we have the lowest, probably customer complaints per million units, as well as one of the highest certified from a sustainability and human welfare perspective. We spent a lot of time on product development, and I think I just want to highlight this product in particular here. We're actually moving. You saw my previous slide where I said we're 3,000 SKUs. So last year we made a big strategic shift to how we can simplify and reduce the number of SKUs we produce, and then focus using data captured from our downstream operations to develop products that can become, billion baht products, so basically flagship products. And so this is like the first of those products. It is based on consumer data that we've gleaned from our downstream operations, and it's based. We'll go more into this later. But it's around a product very similar to Lao Gan Ma, which you will find in Chinese restaurants, which is probably one of the biggest chili crisp sauces in the world. So in Q3, you see a continued diversification of revenue. Ethnic foods dropped to around 40%, plant-based to 5%. You can see here a notable increase of our downstream operations to 24% of revenue, and pet food has now dramatically increased to 24% of revenue. The continued diversification of our business into downstream results in a greater concentration of revenue in Europe, followed by Thailand due to the increase in pet food revenue, and then followed by the Americas. I just want to recap. In 2023, the board of directors came up with a new strategic plan, a 3-year strategic plan, in which we redefined what our core food business was. So I think in our first 4 years, 3 years of being a public company, we focused a lot on innovation and startup-driven growth. And then since 23 to 25, our focus is now has moved from innovation into a pure vertical integration model. So farm, ethnic food, food processing, specialty food processing, and pet food, and downstream retail. So whatever we grow, what we grow, we produce, and what we produce, we sell, and try to basically create as much margin enhancement as we can from this vertical integration. The second strategy is we're still looking very much towards how do we become sustainable and green. But the third part is the most important, is how do we unlock value from what we've already invested in. So over this 3-year period, we're looking at divestments, IPOs of subsidiary companies to generate liquidity and then improve margins. And then how do we increase our organization by hiring the best people possible? So key events in this past quarter around these 4 strategies is number 1. You'll see this later, but we now have fully utilized our second phase production line in our pet food factory, and now we have to double capacity again. So we doubled capacity in May, and now we have to double capacity again in the first quarter of next year. Number 2 is we've signed a new lease to open up a new store in London. Number 3, we've divested all our shares in our subsidiary company doing e-commerce in America. And then number 4 is we've now onboarded a new CFO for our retail business in advance of our IPO. And he's been a former partner of EY for 10 plus years. And he was former CFO of 2 NASDAQ listed companies. So I want to now talk a bit about the divestment of these key events. I just want to talk a bit about this divestment. So in 2020, we invested into an Amazon branded e-commerce company called Boosted E-commerce. We invested in their Series A round. And since 2020 to 2024, September, they have raised a total of almost $400 million US dollars. The latest valuation round is $750 million US dollars. We also created in 2021 a joint venture between Boosted E-commerce and our company, where we own 55% and we consolidate the revenue. And we acquired 3 brands that were leading brands in their niches on Amazon. We have in September divested our 55% that we owned in a transaction that would consisted of $3.5 million in cash, a $6 million promissory note. The promissory note is essentially a 7% interest payable every 3 months, including a 50% cash sweep that every 3 months that will go towards early repayment of the promissory note, in which we expect the promissory note most likely will be fully repaid prior to the anniversary of the 3-year period. In addition, we have sold as part of the deal, we did a share swap of the remaining $12 million into Boosted, the parent company itself, for 2.14%. The valuation is a 20+% discount to the previous valuation round. So there was a creditor that was a global bank, one of the top 40 global banks in the world. They had lent $75 million to the company, and that $75 million was converted at a $750 million valuation. So we converted our shares at a 20+% discount to that round of around $550 million. So in total now, we currently own around 5%, a little over 5% of the parent company. And we believe right now that Boosted will probably seek a liquidity event in the next 3 years. That's driven largely by, in the next 3 years, that's almost 8 years since their founding. and since their venture capital round. And we believe that management, the VCs, as well as the bank will all seek some kind of liquidity event then. We believe that the trajectory of the business is great. They're rapidly growing. They've got now 8 really good brands that they're going to seek to exit. We believe that we should exit at a valuation north of where we've converted. And I believe that this is a hidden gem in our balance sheet. And so the next 3 years, we should see a great return. Very quickly on ESG, so we're still driving across the different KPIs of the 10 SDG goals that we commit to across environment, social, as well as governance and economics. And so now I would like to go into the Q3 results. I will start off by providing an overview of this slide, and then I'd like to hand it off to our CFO. So as you can see here, in the 9 months of this year, compared to last year, our revenue had grown 55%. Our total gross profit margin has grown 40%, our EBITDA 75%, and our net profit by 400%. That's including if you normalize a net profit as well in the 9-month period. Well, let me do this slide as well, the revenue side. So if we zoom into Q3, on a year-on-year basis, our revenue has grown 35%, driven by retail, driven by pet food, and driven by higher revenue from our core ethnic food manufacturing. Gross profit margin as an absolute value has also increased 20%, as well as EBITDA, and as well as net profit. Let me do one more slide, since we're still talking about revenue. This is easier for me to describe when we're talking about revenue. When it gets more complex, I'll let our CFO describe it. As you can see here, there's some seasonality, as you can clearly see from our historical performance. So you'll notice, right, that Q1 tends to be a weaker period. And then as we move into the year, it tends to grow. And the reason for that is that within the ethnic food business, Q2, people stock for autumn. In Q3, you stock for winter. And then in Q4, you stock for basically New Year's, Christmas, and Chinese New Year. I think as we continue to grow our retail business, that might slightly change. But as you can see here, this is where we see Q4 going as well, if you look at seasonality. If we look on a year-on-year and Q-on-Q basis, we've actually grown, as you can see here, the top line. And then again, on a 9-month basis as well. So I'll hand it off now to let our CFO go into basically gross profit margin.
Okay, thank you, Dan. For the gross margin for the Q3 is 31% is drop. Compared with the last year, 35%, and the last quarter to 32%. This is due to the sales, a higher sale of the pet food and then the retail business on that one, because the both business have a lower gross margin than the ethnic food. But however, in terms of the amount, we got the gross profit is higher than every quarter from the last year and the last quarter also, because of the higher sales. And for the 9 months, same thing that I mentioned is a higher, the gross profit for year-on-year is 40%. And then for the Q-on-Q is 20%. No, 9% Q-on-Q for the quarter. For year-to-date is 40%. SG&A, this is you can see the amount of the month is the highest one, because in this one, the administration, we including in the reserve of the impairment of the overdue account receivable. That one is, if excluding from the impairment of the overdue account receivable, the SG&A only going to be only 225. So which is the amount is the lower than the last quarter and then last year also, which means we improve the SG&A. And then the EBITDA impact, as mentioned, the higher sale and then the margin and then SG&A. And then gonna hit EBITDA for 206 is higher than every quarter for the last year and then onward. And however, I would like to highlight this one be including the gain on investment of the boosted e-commerce and then fair value. So it's the highest amount. And then we have the reserve on the impairment test. So we net off or gonna be this EBITDA. And then you can see the percentage of EBITDA is improved, 20% for this quarter compared with the last year is 15% and last quarter is 14%. For the year to date, EBITDA is increasing from 14 last year to 17 this year. Net profit, same thing, and the net profit is 38 net profit, or 4% to sell, compared with the same rate in the last year, but higher than the last quarter. But in terms of the normalized, this one, because if we excluding for the unrealized loss on exchange rate, this one normalized net profit going to be 74. And I would like to clarify for the unrealized loss on exchange rate, but it's only on the balance sheet between our subsidiary and NRF. Mostly they are not from operation at all. And then you can see the improvement for the 9 months. The net profit improved from 1 last year to 5% to total revenue. In terms of the normalized, we excluding for the loss on unrealized loss on exchange rate is going to be improved by 5% from negative 2% to 5% compared to last year, or 450% year on year.
So I think just a very quick commentary. I think what we're moving towards is I think for again 2020 to 2023, 2021 to 22. We drove a lot through kind of how do we go through a new S-curve and new economy, driving through growth, working with startups. And I think when we redefined what we really wanted to focus on, to basically smoothen out, tech valuations, disruptions in terms of funding rounds, etc. I just focus on core manufacturing, farming, manufacturing, and retail. I think what we're moving towards is a continuous CAGR on revenue, gross profit margins from an absolute value perspective, and then net profit, and then removing, I think, and then cleaning up basically our company from a balance sheet perspective in terms of historically, and I think a lot of companies who invested within kind of the whole startup ecosystem had faced a lot of these issues. We are just one of those, and I think I'm very thankful in 2023. As a board, in the beginning of the year, we came up with a new plan. We stopped all those investments, and they just focused on this core business, and it's growing really well. And I want to lead this into basically segment analysis, and you'll see why. So if we look at the core 3 review by segment, and this is an AI generated picture. We've been fascinated with how AI can help us with data. I don't know if any of you have heard me speak since 2020. One of the reasons we went into e-commerce was data. And one of our challenges and key pain points as an exporter is that there is no data available as an exporter in the ethnic food channel. So again, you can see here on a segment by segment basis, everything has grown nicely. Pet food 100%, omnichannel like retail 100%. Manufacturing is I think hitting kind of where we think it should, a little below where we should hit, around we expect around 15% annual CAGR. And then e-commerce is just kind of like averaging out around 80 to 90 million baht in revenue. And here, our ethnic food manufacturing has been around for 30 years. We've got, it's 35% brand, 65% OEM. What we see happening is that there is actually now due to the U.S. economy and the reemergence of travel in Europe, we're seeing a really strong demand in 2025, especially within Europe and the UK and on the OEM side as well. And so what that has allowed us to do is really focus on how do we drive brand. And so we've been spending now a lot of money on marketing branded products in Thailand, and then we're focusing a lot of this marketing activity into now the UK, which we hope to launch in Q1 of next year. We're learning a lot about how basically sales on TikTok is translating into brand awareness, which is translating then into demand on shelf. And so that's great. And, we built a new sauce factory that just came online, 2 quarters ago. And we're starting to book out capacity, and we're going to see, we already have now very large multinational clients who want to basically increase their production capacity. And we're looking towards hopefully a 50 to 60% capacity utilization next year of this new factory. And that will reduce our overall cost per unit by 5 to 10%, increasing our gross profit margins. Overall, our plans for this quarter is to, from a manufacturing perspective, is to launch our Korean-inspired products in Thailand, Europe, and the UK. To focus more on eating at home and meal kits where we see OEM demand, driving marketing in the UK and the US, and then preparing, more importantly, our new product launches in Q1 of next year. Oh, okay, time's limited, so I'll quickly go through this. Again, I think this is super important. This chili crisp is a new product that's growing amazingly well with really strong consumer feedback. It takes time for these things to grow into like a flagship product line, but I think that this is our next flagship product line. And this grew up, this came out of data that we got when we first started the retail business. We saw really strong demand for a Lau Kan Ma, a Chinese chili sauce product alternative. We decided to develop it. We're the only ones in ThaiFlex to have it, and we have continued repeat orders from customers, and those repeat orders are now growing. So very, very, really happy. I would say from a growth perspective, our current target markets are the European Asian food market, the UK Asian ethnic food market, which consists of Asians in the UK and British tourists. This is where we have an intense focus. I want to quickly move to pet food due to limitation of time. As you can see here, we've grown revenue every quarter. And this is driven primarily around demand for our dry pet food, demand especially for our branded new products. And so we're actually now, because we're running at almost 100% capacity on our second line, we're now focusing on customers with higher margins. We're focusing more on yield improvements as well as reducing cost per unit and then increasing channels as well as online as well. Here, I want to spend a few minutes talking about this. So we had increased, so we filled production of our factory in its first production line in Q4 of last year. We then, in May, started our second production line, which doubled our capacity from 1,800 tons to 4,000 tons per month. That was in May of this year. We've now actually maxed capacity in September. And what we've done now is we've taken a decision to average capacity out at 90% rather than trying to max it out at 100%. And the reason is if we average it at around 90+%, we're going to refocus on higher margin product, lower cost per unit, and then working on doubling capacity again. So our plan now is in Q1 is to find a workaround to double capacity again from 4,000 to 6,000 to 8,000 tons per month. And then potentially, this is an IPO spin-off candidate for the end of or filing for the end of next year. So this is in line with our strategic plan, which is basically divesting or creating liquidity events for investee companies. In Q3, just quickly talk about the e-commerce brands. So, our quarterly performance here in our e-commerce segment was around 90 million baht per month. I think there's some seasonality as well as new product launches, and then delisting the old brands and then relisting the new, delisting the old packaging and then relisting the new packaging. And so performance is just kind of like where it should be. And then we basically completely divested this because it didn't fall within our new strategic plan. We don't grow, produce, or directly sell any of these products. And so I think when we discussed with our partner and they were happy to acquire it, we said, well, this is along the lines of where we see this happening. Okay, I want to spend the limited amount of time now with on omni-channel. So basically here you can see here retail performance on a Q3 year-on-year basis, right? So it's jumped dramatically, and there is a bit of a seasonality, I would say. So what we've learned in retail is that in the UK context, the third quarter tends to be a weaker quarter for the whole year. And the reason is in the third quarter of the year, local British people travel outside of the UK. And so restaurant revenue actually dips between the July to August period. And then it picks back up in the September and October period when British people come back to the UK. And we see this in our monthly revenue as well, especially going into September and October. So in the quarter, actually, what we should see in Q4, which we're already seeing the data, is going to be a jump again in Q4, both in terms of revenue from food service as well as revenue from cash and carry as well. Our plans are currently is really kind of growing, renovation of our food cash and carry, improving our food service network, as well as increasing the number of branches. Let me quickly show you what I mean. So in the UK market, it's a very large ethnic food market, of which 40% is driven by Asian grocery. And that's because the increasing diversity of the UK market, the strong increase in terms of Asian foods. Let me just quickly go through, because I only have 2 minutes left. We spent almost 100,000 plus pounds renovating the cash and carry to make it look more modern. If you've seen it today versus last year, it's completely different. And we're seeing now a bump back up in terms of footfall. Basically, here in the cash and carry, we're focusing on two things now. So number one, what you see here is air cargo, fresh food and fresh product from Thailand on a bi-weekly basis. And we're looking at improving the sales of what we grow into the supermarket. Number two, this is our product on retail shelf. So now we're working with expanding the number of products that are provided on shelf, as well as increasing the number of products that are available through food service. In the last minute, I want to quickly go through, this is our new branch in the UK, which will launch in hopefully by December or by Christmas. It's about 4,000 square feet, so it's a nice size for a supermarket in a highly Asian residential area. So very quickly in the outlook for 2024, I think this is very similar. Oh, I have 5 minutes. I thought I had 1 minute. Oh, 5 minutes. Okay. In that case, let me just quickly go back. Sorry about that. So I want to quickly then talk about the retail business. So revenue in the retail in the UK, okay, is 67% retail, 33% wholesale. I'm sorry to go back and forth. I misjudged time. The wholesale is actually what's happening is that we have in our cash and carry, there's a warehouse, okay? And in that warehouse, we are servicing restaurants and little stores that are within a, I think, a 15-kilometer radius of our cash and carry. Okay, so we're currently using a hub and spoke model. So what you're seeing here is this is the frontage of our cash and carry. And then what you're seeing here is the back of the warehouse. And this is where we have, currently we've expanded our van network, a number of vans. So when we first acquired the business, there was 8 vans. We now have 18 vans that cover the entire, almost part of central London from this cash and carry. And so what happens is that we're able to generate large volume, right, through the cash and carry and flow through into our food service network. We now cover almost 400 points of service, which are basically restaurants, and 30 supermarkets, Asian supermarkets within the vicinity. Why is this important? This is important because we now see a lot of data. For example, we see data that what are people buying in cash and carry, what are people buying in supermarkets, and what are restaurants buying as well. And right now we're it's taking a bit of time, but we're converting what we're getting from our salespeople and our call centers, and we're actually now driving it into automated analytics. So for example, this quarter, we're onboarding a new system, which is completely automated in food service, linking it directly into our analytics platform with AI that generates then, for example, data. And then in Q1, we're launching a loyalty program, which will then work through into our retail, retail stores, where then we can merge a very clear picture by, I think, Q2 of next year. We'll probably be I'm 100% sure we will be the only company in Thailand with a complete picture of what's actually happening in consumption of consumer retail, consumer cash and carry, wholesale, as well as ethnic grocer in the UK. Now, if we can do this well, this will generate valuable data, real time to manufacturing, to where we should be manufacturing product lines, where we should be marketing our products from a brand perspective. And then we can share that data. Obviously, we'll sell the data to other exporters. I mean, we want the whole country to benefit from this. A lot of supermarkets generate an enormous amount of money from selling research. And we will be the only one, probably in the world, in Asian ethnic, to be able to do this. I'm super excited. We're going into this direction. It's not immediate, but you're going to see us being able to do this. And this will also translate directly into being able to sell in-store media. So you walk into any Chinatown supermarket today, there is no in-store media, right? What we're doing is we're going to start it within our own stores and then expand it into other stores. And so I think these are new sources of revenue that we'll tap. It won't happen this year. I don't even know if it'll happen next year. Once we have a very good network, it will happen once we get to scale. I'm super excited. And again, the Chili Crisp product is that first version of product being launched that will hopefully turn into a flagship product moving forward. And I say flagship product, we're talking, probably for us anyways, a flagship product is $1 billion revenue. It means large scale manufacturing with good gross profit margin that is a branded product. Okay, So FYI, fiscal year, at the end of what I can, this is no different from the previous quarter. We've already hit our 30% revenue product growth from retail and pet food. I think we'll hit these for the full year, driven by this. And then, the liquidity plans, we've done that. We have other plans in process as well. I will end our presentation with a 1-minute summary. So I think I think where we are is midway through a 3-year journey. So, I think our first 3 years as a listed company, we had a lot of lessons learned going through COVID, through a 2022 Fed interest rate increase that severely impacted, I think, the whole startup universe of innovation. With that lesson learned, we redefined where we want to be in a 3-year plan where we defined our core business as growing from an agriculture perspective and sustainably green, to food processing of Asian foods, into food retail within an Asian food retail context in the UK, starting in the UK and then jumping into other countries, right? And so within this vertical integration, divesting or selling or creating liquidity for portfolio companies to generate liquidity, to then reduce our debt, which we're on our way to doing, deleveraging, focusing on core business, reducing our cost per units, increasing our gross profit per unit, driving revenue, simplifying our SKUs, focusing on core flagship brands, focusing on generating very valuable data insights from retail into manufacturing, working within our vertical integration to improve margins and reduce leakages. I'm super excited to where we're taking this. I think within next year, as we quickly grow our retail side, it's going also to drive our manufacturing revenue along with it. And I think this is exponential growth for us within a domain where we have strong industry expertise. And so with that, I want to thank everybody for attending, and สวัสดีครับ
สวัสดีค่ะ
Okay, the section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you, investors and corporates, for joining the conference. We look forward to welcoming you all again in the next quarter. Thank you very much. ขอบคุณค่ะ
ครับ สวัสดีครับ ขอบคุณครับ